Setelah lebih 2 tahun ekonomi dunia dan negara kita berhadapan dengan cabaran pandemik COVID-19, keadaan ekonomi kini semakin pulih, terutamanya dengan kadar vaksinasi yang tinggi dan pembukaan semula aktiviti ekonomi. Walau bagaimanapun, trend pemulihan ini berdepan beberapa cabaran yang perlu ditangani dengan sebaiknya. Please allow me to continue in English as we are addressing an international audience. In essence, the Malaysian economy is expected to strengthen in 2022. Notwithstanding, there remains significant uncertainties that could shape the recovery path. Developments surrounding COVID-19 will continue to influence Malaysia's growth prospects. Heightened geopolitical tensions stemming from the military conflict in Ukraine, rising commodity prices, and volatile financial conditions will also shape the outlook. In this operating landscape, policies remain in place to support vulnerable segments. Looking further ahead, Malaysia needs to remain focused and make further progress on the implementation of key structural reforms that have already been identified and announced. This is to ensure that the economy emerges from the crisis stronger and more resilient. These include advancing initiatives that furthers a conducive investment climate and enhances long-term competitiveness. Let me begin with the global economic landscape in 2022. The outlook will be shaped by 3 factors. First, the state of the pandemic. Higher vaccination coverage and the introduction of new medications will allow countries, including Malaysia, to transition to endemic management of COVID-19. However, severe resurgences could still disrupt economic activity. Second, the ongoing military conflict in Ukraine. This is expected to weigh on growth prospects via several channels, including the disruptions from the trade and financial sanctions, higher commodity prices, and volatile financial markets. And finally, the normalization of policy support in an environment of high inflation and recovery in demand in the advanced economies will have a bearing on the global economy and possible tightening of financial conditions. Overall, global economic activity is projected to continue its recovery. We are projecting the world growth will grow between 3.8% and 4.3%. This will lend support to Malaysia's external sector. The continued expansion in external demand and the global uptake cycle will benefit our economy, especially for Malaysia's E&E products, which account for more than a third of our exports. Global growth of global semiconductor sales continues to remain well above its long-term average. With commodities accounting for more than 10% of total exports, the higher prices would provide further impetus to Malaysia's growth exports. Travel receipts are expected to rebound after the trough in 2021, with the reopening of our international borders and as more countries gradually relax their international travel restrictions. Nevertheless, the rebound in international tourism activities is expected to be gradual, given the risk aversion and international travel restrictions that still remain in some places. Another key factor surrounding the outlook landscape is COVID-19. Malaysia, we have one of the highest vaccination coverage globally. This chart shows that almost 100% of adults in Malaysia have been vaccinated, and the statistics here includes the migrant population. And the pressure on Malaysia's healthcare system has been manageable. Against this, Malaysia will begin its transition to endemicity on 1st of April. The transition will be proportionate and fully calibrated. While certain SOPs and public health measures such as mask wearing, self-testing, and quarantine requirements remain, we do not expect broad nationwide containment measures as seen in the past 2 years. An increase in economic activities would lend to further improvements in employment prospects this year. Following this, both unemployment and underemployment rates are expected to decline gradually for the rest of the year. The continued high job placement rates since the end of last year also indicate encouraging signs of strong pace of hiring in 2022. Targeted policy measures also remain in place to support vulnerable segments affected by the pandemic. Upskilling and reskilling initiatives will also continue to facilitate the redeployment of workers. Over the long term, structural reform initiatives such as raising the quality of education and strengthening active labour market policies would ensure a more resilient and agile workforce. Improvements in labour markets are expected to support higher household spending. Employment and income outlook for the year remain positive, underpinned by latest data and the expected salary increases by Malaysian employers. Furthermore, the absence of strict containment measures would contribute towards an improvement in consumer confidence and spending. We are already seeing recovery in mobility and spending indicators as compared to last year. Some segments of households may continue to be affected given the uneven recovery across economic sectors and rising cost of living. Taking all these challenges and developments into account, the Malaysian economy is thus expected to record higher growth of between 5.3 and 6.3% in 2022. Despite the challenging operating environment, particularly developments surrounding the pandemic, geopolitical conflicts and price pressures, growth would continue to be driven by both external and domestic demand. International tourism activity is also expected to pick up amid the reopening of international borders. On the domestic front, improvements in labour market conditions, continued capacity expansions, higher technology adoptions, with continued targeted policy support for vulnerable segments would underpin the spending by both households and businesses. Nevertheless, risks to the economic outlook remain tilted towards the downside as shown in this chart. Downside risks stem mainly from more severe pandemic-related shocks, such as the emergence of vaccine-resistant VOCs, as well as continuous rise in cost pressures. Notwithstanding, there remains some upside potential to the outlook, and this can stem from higher-than-expected global growth, stronger-than-expected improvement in tourism-related sectors, and the smooth implementation of the recently announced increase in the minimum wage.